business now, supported by Absa Bank Uganda, currently enabling you, our customers, to get access to digital loans seamlessly without a hassle. It is simple. Absa Bank DG loans can be accessed instantly by existing Absa Uganda customers like you via the USSD star 233 hash, the Absa Bank app or internet banking, and these unsecured paperless loans offer you up to 5 million shillings without any hassle and at any branch or collateral. Applicants must have an active account with a regular monthly credit turnover. And let's now dig into our stories. Absa Bank Uganda delivered a strong financial performance in 2025, with revenue rising 16.6% to 637 billion shillings, profit after tax, and all this performance supported by growth in customer deposits to 4.6 trillion shillings and 29% expansion in total assets. The results were presented to the press at the Sheraton Kampala Hotel by the Group Chief Financial Officer Michael Segwaya and Executive Director David Wandera. So the bank says the performance reflects deliberate strategic choices anchored in customer-led growth, disciplined lending, and continued investment in digital innovation, positioning it to better support the sectors of the economy. They also attributed the good performance to the resilient Uganda economy during the period, with GDP growth of about 6.3% and inflation of about 3.5%, creating supportive environment for the banking sector expansion.
Our 2025 results reflect deliberate, disciplined choices to strengthen the bank and build capacity, future capacity. Revenue grew 16.6%, reaching 637 billion. Customer deposits increased by 46.4% to 4.6 trillion. Total assets grew by 29.4%. Profit after tax increased by 25.1% to 222 billion. These outcomes are not just about growth. They reflect customer trust, balance sheet strength, disciplined execution, and a bank well-positioned to support Uganda's development. Our performance is anchored in refreshed strategy built on 4 pillars: placing the customer at the center of everything that we do, strengthening our Pan-African reach, driving disciplined execution, and unlocking growth through innovation. Capital discipline. We were very intentional about where and how we deployed capital, focusing on the productive sectors of the economy. We continue to invest in digital, new product development, and selective inorganic growth.
And with that performance on liabilities, that transformed to the revenue that you are seeing. Net interest income growing by about 16%. You need to correlate that revenue income with what happened on the asset side. I should say we are doing about 7% on the assets, fundamentally because of the fact that we saw a lower growth in the last quarter of the year, which is really driven by what was happening around the election space. But we have subsequently seen that turn around this year. The non-funded income is also a reflection of the transactions that are happening across the bank. There's a correlation between that non-funded income growth and what you're seeing in terms of liabilities. And you can clearly see that the current accounts are growing to that effect. Current accounts are where customers are opening up business accounts, trying to ensure salaries are coming through, and that has also grown tremendously to that effect. And we're seeing very good growth in that side as well. We had very good growth in the retail bank, and corporate taking about 30%, and markets as well. I felt that I could share some key ratios, and I think these more or less cover 3 years, because we are looking at growth in some of them. Cost to income ratio, I think I've talked about that, specifically showing that our revenues are growing faster than the costs. Non-funded income against total income, we are slowly and surely ticking up our non-funded income. The loan loss rate slightly went up, fundamentally due to USAID and a few other things that were really outside our control, but this is by and large well managed. I think 0.4% loan loss rate is still a very good rate in that regard. We've seen the coverage ratio, that is more or less staying in place. The other key ratios, I think, have fundamentally remained the same. I just want to comment on the capital one. We are seeing our capital ratios grow, return on equity. In other words, we are using the funds the shareholders have given us to try and ensure that we provide a greater return. It's also a reflection of the resilience of the bank. Clearly to take on bigger transactions and serve our customers even better.
Uganda equities market kicked off 2026 on a strong note, with the turnover nearly doubling in the first quarter to 32.6 billion shillings, up from 16.9 billion recorded over the same period last year. Now, trading activity on the Uganda Securities Exchange was largely driven by heavyweight counters, with MTN Uganda accounting for close to 2/3 of the total turnover, followed by Stanbic Bank Uganda and Bank of Baroda Uganda. And market performance was equally robust, with double-digit gains recorded across key domestic stocks, led by telecom firm MTN Uganda, Airtel Uganda, and Stanbic, signaling renewed investor confidence and stronger corporate earnings. That rally comes amid improving macroeconomic conditions, according to officials. Let's now hear from the chief executive at the Uganda Securities Exchange, explaining what was behind the stock performance.
Dividends declared year to date, we've seen a lot of, this is the season for financial results, and that's why we are here. So we've seen 7 out of 11 companies have declared dividends, and most of the companies have actually reported their financials. Our index continues to perform well this particular year, up 36.6% year to date in 2026, and the all share 22%. So positives from MTN, Bank of Baroda, Airtel, Quality Chemicals, where we've seen prices significantly gain and drive the local index. But if you also look at the comparisons, regional comparisons, we continue to fare well. We're the second compared to DSC, which stood at 43.1%. Their all share index was up 43.1. We stood at 36.6, and Nairobi at 11%, while Rwanda stood at 4.4. On the fixed income market, treasury yields and the curve have decreased, as we mentioned, an aggregate 153 basis points post-election. Total stock of securities in the market stand at 71 trillion, and overall you can see that yields have on the exchange, we've seen in Q1 12.8 billion traded in fixed income securities, driven by both the primary market at 5.6 billion and 7.1 in the secondary market. So the bond market continues to show significant growth, and this is majorly driven by retail investors on the exchange. So for us, as we look at it, it's quite positive to see the retail investors participate in the bond market. Number of investors on the exchange, CDS accounts stand at 275,000. Of the retail, we have 270,000, and the institutional at 4,800. Local nationals, those are Ugandans, at 259,000. And foreign nationals at 11,000. So it's good to see that the locals participating in the market, even though when you look at the turnover, the institutional drive the majority of the turnover on the exchange, and so do the foreign investors. But we've seen a positive from both the East African and the locals participating. So The analysis of Q1 accounts grew from 162 in January to 1,700, a 10-time increase over the period, driven by Crested Capital's physical drive and the USSD activation. So finally, in terms of performance of volumes, institutional drove 308 million shares traded, retail at 149 million, a total of 458 million shares traded. But in terms of value, institutional drove 47 billion worth of trades, the retail at 18 billion. And I think this is a positive insight in terms of showing the retail, the individuals really participating in the market. And that has resulted in a growth of 72.24 for institutional investors and 27.6%. So really positive insights in terms of trading. But in terms of the trades on the exchange, the net positive is that East Africans traded 19.63 billion. The locals sold 17.4. That's the local net outflow. And the foreign also sold 2.23 billion.
Let's now turn to logistics, because in the heart of Ginger at the scenic Source of the Nile Hotel, a major boost to Uganda's transport and logistics sector just unfolded. WQ, in partnership with SinoTruck, have officially launched a brand new 4-ton box body truck and unveiled a complete range of box body solutions for 4 all the way up to 28 tons under the campaign theme codenamed Move More and More. And these trucks are designed to help businesses of every size scale up, and it cut costs and increase their profits, from small urban delivery operators to large industrial haulers. We bring you the highlights from WQ, and I say that's now one reliable partner for every stage of growth.
We're not just unveiling a truck. We're introducing a smarter way for business to grow. Our theme tonight is Move More and Earn More. It's rooted in a simple truth. Every business thrives on movements. The more efficiently we move goods, and then the more profit we can unlock. Our flagship tonight is the Power M2 box body. Has been carefully engineered with one purpose: to maximize your earning potential from day one. And that's why the 4-tonners is designed to deliver exceptional value where it matters the most. The 4-tonner offers, first of all, a strong payload capacity, so you can carry more and earn more per trip. Durability you can rely on, minimizing downtime and keeping your business running. As the flagship of our lineup, the 4-tonner represents the starting point of a complete growth journey. And as your operation expands, you can seamlessly transition into our 10-tonners, 15-tonners, 20-tonners, 25-tonners, and even 28-tonners. So our commitment goes beyond trucks. We are committed to uptime, reliability, after-sales support, and most importantly, to your profit. Because when your business grows, we grow together.
Yeah, to the Ugandans, today we launch our box body solutions, full spectrum of box body solutions, and I said 4-ton, 10-ton, 15-ton, 20, 25-ton, 28-ton, and under a campaign theme, Move More, Earn More, implying move more cargo, earn more, and make more profit. Customize your business to the need so that you make better profit. To our Ugandans, we tell you, if you're looking at different logistical requirements, either it is light freight or large haulage or long haul. Long haul implies going longer distances, Mombasa or Dar es Salaam. WQ or SinoTruck by WQ is your most important partner. your most important logistics partner. Come to us, we will give you customized solutions. It doesn't matter what type of business that you are in. If you are in sugarcane, we are able to customize the boxes of these trucks to speak to your sugarcane business. If you are a distributor of fast-moving consumer goods, we are saying we can customize. We are not saying come get a truck. We are saying talk to us in terms of your needs. Let's customize the solution for you. And we have able and competent teams, over 1,000 staff with specialties in speaking to your needs. Visit us, come to us. We are available online via www.doubleq.co.ug. Yes, and of course, reach out to our physical locations. Our head office is at Busega, just at the terminal point of the Northern Bypass as you get into the Entebbe Expressway. I think that's that, and thank you for supporting SinoTruck and making it your #1 truck.
And that's all we had for you on this edition of Business Now. The program is supported by Absa Bank Uganda, currently enabling its customers to access digital loans seamlessly without a hassle. It's simple. Absa Digital Loans can be accessed instantly by existing customers via USSD *233#. The Absa mobile app can also get you there, and internet banking as well. These unsecured paperless loans offer you up to 5 million Uganda shillings in minutes with no branch visits or collateral required. Applicants must have an active account with a regular monthly credit turnover. And for more business news and updates, stay connected to our platforms. Next up is NTV Tonight with the latest stories on Uganda and abroad.